third plenum of China's 18th CPC Central Committee will kick off in Beijing this Saturday. It's expected to inaugurate extensive economic reforms. Now, media reports indicate part of those reforms could well be breaking up monopolies in the country's energy sector. Zhang Tao reports.
At two petroleum stations in Shanghai, drivers said they routinely choose smaller stations rather than ones run by bigger players, mainly for lower prices. Mr. Lu has been a taxi driver for 8 years.
For taxis, the cheaper the better. Sometimes Sinopec offers discounts during the evening, but here there are discounts all day long.
The price of number 92 fuel at this Dongliang station is 0.3 yuan per liter cheaper than that at the Sinopec station nearby. Sinopec's price is 7.75 yuan per liter. Staff at the station say they usually try to undersell the market, and drivers confirm this.
Compared with Sinopec and PetroChina, there are discounts here.
China, the world's second largest oil user, already relies on imports for 60% of its consumption and is set to double its fuel use by 2030. Right now, large state-owned oil companies still monopolize the sector. It's not easy for smaller private operations to gain market share against the big established companies.
In Shanghai, private stations may take up only 5 or 10% of the market. It could be more in the suburbs. It's just like a movie. When the seats are full, there's no room for latecomers.
China's leading oil and gas producer, PetroChina, and Asia's largest refiner, Sinopec, reported last week net profit growth of some 20% in the third quarter. They are benefiting from higher refinery margins following Beijing's loosening of price controls earlier this year. Domestic prices are now allowed to more closely follow international levels, but there are doubts over how far Beijing will go to shake up the state-owned firms, given the difficulty of making large-scale changes. But there is no doubt over what the effects could be.
Competition will help consumers to get better service and prices. The oil price will be 10% cheaper if the oil sector were open to more players.
China's retail oil price has risen nearly 40% since 2009. Zhang Tao, ICS4 CCTV, Shanghai.